Hey, what's up, my friend? So, in today's episode, right, we are going to discuss, right, how do you be in the top 5% of traders when the majority fails, when 95% of traders fail? Okay? So, here's the thing, right? The way we're going to, run today's episode is that we first and foremost will discuss about how losing traders think and then how professional winning traders think, right? So, there's two sides to it. So, number one, right, for most losing traders, they treat trading as something that, they can make money fast, right? Generate a consistent income from trading, make money every day, every week, every month. And when they try this endeavor and they don't find success, what happens? Well, they can try again for a few more weeks, few more months, and eventually they will burn out and give up trading altogether. And that's why the statistics is so high, right? The number of losing traders, because they are very short-term oriented, right? They think, oh, all I need to do is just study a weekend course, I can master trading, I can make a consistent income, blah, blah, blah. But on the other hand, right, professional traders, the best money managers in the world, they are not looking to make a consistent income every day or every week. They are thinking in terms of decades, right, to compound their returns over time, and that's how the big money is made. The big money is not made, right, trying to make, 50 pips a day, 100 pips a day, and stuff like that. No, the big money is scaling up your trading account and letting it compound over the next few decades. Alright, and that's the first key difference, right? Is that in terms of expectations, most losing traders, they are too short-term oriented. They want it now, they want it fast, they want it this week, they want it this month. And that's why they fail, right? Because it's unlikely to happen. And when it doesn't happen, their expectations are not met. They try to persevere a little bit more. Eventually, they give up and they're part of the 95% of the statistics. So that's the first reason, right? They don't embrace compounding. So if you want to be the top 5% of traders, number one, you have to embrace compounding. Think long term. Number two, for this one over here, right, is that, for most losing traders, they structure their trading in such a way whereby heads I win, tail I lose. Okay, but for the top traders out there, they structure their trading in a way that heads I win, tail I also win. So let me explain. So if you read the book Market Wizards, right, you know that a few of them went on and managed, their own hedge funds. And that's a brilliant thing, right? Because when you manage hedge funds, when you manage people's money, heads I win, tail you also win. And here's how. Because when you manage hedge fund, right, you have something called management fee. So every year, okay, whether you make money or not, you can take a small percentage of the fee, right, of the assets under management, right, and cover your expenses. Can be your salary, can be your office, whatsoever. In the past, it used to be 2% a year, now might be lesser. But they have a management fee, and this fee helps them cover their expenses. So they might have a losing year, a losing month in trading, doesn't matter, they still get paid anyway. And if they make money for the year, guess what? They're going to take a cut of the profits. So you can see that in a way, it becomes, head they win, tail they also win. And that's how you want to structure your trading, right? Head you win, tail you also win. But I know, you're not going to set up a hedge fund this year or next year. Unlikely. So what can you do about it? Well, again, just study the people who have excelled in this field, right? For example, Mark Minervini, he is a stock market wizard and he's doing it brilliantly. He clearly, right, has an amazing ability to trade the stock markets. But that's not his only source of income, right? He has books that he sells, he conducts seminars, he probably have a membership area for members, and again, heads he win, tails he also win. And that's really important, right? You want to structure your trading in a way that you win, right, both ways, whichever it goes, right? And most losing traders, they only think about their trading, the only source of income. And when it doesn't make money, that's it, right? They lose. So think about how you can make this happen for you, right? Heads you win, tail you also win. The third thing, right? Most losing traders, right, they fail is because they're not willing to do the work. And you might be thinking, oh no, Rayner, I am willing to do the work, right? So let me classify what isn't counted as work, right? If you go down to a forum and surf for new trading strategy and see what people are checking about the markets, what they're talking about, that's not doing work. If you, blindly follow someone's strategy because they say that it works for them and you try the strategy for the next 3 to 5 trades, that's not doing the work. Let's be honest, right? So what does doing the work entails? For traders, right, who are serious about this, right, doing the work means taking a particular piece of strategy, a concept, right, and doing the work to validate it, to find it whether does it work based on historical data. So this means they could do back testing, systematic back testing, right, running through the data, running through the strategy across historical data and see how that strategy fares. If it's working, great. Maybe I can test it in a live market using a small amount of money and see how that works out. That's what I mean by doing the work, validating the concepts and strategies you come across. But most people, right, most losing traders, they just take the strategy, take it at face value. When someone says it works great, I'm going to trade it live. And that's how they lose, right? Because they won't have the confidence, right, to continue trading it, right, when the drawdown comes. So you must be willing to do the work. Be willing to validate the system, the concept, the strategy. Only then, right, do you have what it takes, right, to trade at a professional level. Next one. Losing traders, they simply focus on the winning rate. And don't feel bad about it, because I myself, I used to like a system with high winning rate. 90% win rate, alright, that's how the money is made. But here's the thing, right? You can have a high winning rate system, a system that makes money 90% of the time. But in the long run, you could still be a losing trader. How is that, Rayner? How is that possible? You say to yourself. Let me give you an example. Let's say you have a system that makes money 9 times out of 10, right? Every time you win $1. But the 10th time that you lose $50. Can you see that how all your little profits that you have accumulated along the way is eroded, right, when that 10% of your losses come, right? Because one time you lose, right, your losses is so huge, right, that it wipes out all your small accumulated open profits. And that's how you can remain a losing trader despite having a high win rate. So now how do the pros look at this? How do the top 5% of traders look at this equation? Well, they don't just focus on winning rate. That's the truth. They focus on a few things. Number one, winning rate is one part of the equation. They also focus on their average gains to loss, right? Because what's the point of having a high win rate but your losses is so much more larger than your winners? So that's why they also pay attention to their average gains to loss. And the last and final thing they look at is also their frequency of trades. For example, a high frequency trading firm called Virtu Financial, if you study their piece of research on them, their winning rate is about 51%. Right, about 1-to-1 risk reward ratio, about 51%, 52%. And they are consistently profitable every single day. And how is that possible, right, with such a average matrix? Well, the secret is that they have a high frequency of trades. They trade thousands of times each day. And that's how that HFT firm, right, can make money almost every single day. Another example, a trend following hedge fund. Their win rate is anywhere between 30 to 40%. But how do these funds, right, manage millions, if not billions of dollars? Simple, right? They don't just rely on their winning rate. They also have, right, a high average gains to loss. This means that when they lose $1, okay, that's fine, right? They, on the other hand, right, will tend to make $3 or $4 on their winning trade. So their winners, right, are 3 to 4 times larger than their losers. And that's how trend following hedge funds make their money. So you can see that professional traders, they don't just focus on the winning rate. It's winning rate, frequency of trades, and your average gains to loss. That's important. And finally, last thing, right, is that losing traders, what do they focus on, right? What are they usually, affected by? Number one, the news. Number two, opinion, right? They always, find out, oh, NFP, right? Bad results. Oh, someone says that, this trading strategy doesn't work, right? Or someone says that, hey, this chart pattern is very reliable, 70% hit rate. I should focus on this. And that's how losing traders think about this, right? They are swayed by the news, the noise, the opinion. But what about professional traders? What about the top 5% of traders? What do? Well, they let the data speak for itself. They will only make trading decisions based on the data. And where do you get the data from? It could be based from your back testing, could be based on your forward testing. It's based on your own testing, your own work, your own research, as what I've shared with you earlier. And that's how the top 5% of traders, all right, make their decisions based on data. Not based on feel, not based on opinions, not based on news, not based on noise. Okay? So let's do a quick recap, right? I know I've covered a lot in this episode. Number one, the top 5% of traders, they embrace compounding because that's how the big money is made. Number two, the top 5% of traders, right, structure their trading in such a way whereby head I win, tail I also win. Number three, top 5% of traders, they are hard workers. They are willing to do the grunt work. They are willing to validate the concept, the strategy that they come across. They don't trust anyone or anything. Number four, the top 5% of traders, they focus on expectancy, right? In other words, they focus on the winning rate, they focus on your average gains to losses, and the frequency of your trades. And number five, okay, if you want to be a top trader, or you want to be a consistently profitable trader, you must follow the data. Don't follow the news, don't follow the opinion, don't follow your feelings or whatsoever. Follow the data. So with that said, I've come towards the end of this episode. I wish you good luck and good trading. Until next time.